Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else.
Friends, welcome to another video on your channel Profit and Equities. In this video, we'll be talking about two lesser known small companies from the commodity chemical space which could turn out to be future multibaggers. Now, favorable supply demand dynamics and better end markets have led to improved operating performance in this segment. We'll be talking about two stocks which are expected to exponentially benefit. Please watch this video to know more. Now the first stock on the list is ChemFab Alkalis Limited, which is available at Rs 164.75 and the face value for it is 10. The symbol for it is CHEMFAB. Now ChemFab Alkalis is a relatively small player based out of Tamil Nadu with a caustic soda capacity of 45,600 tons per annum. Its revenue mainly comes from caustic soda, that is 71% of sale, and sodium chlorate, which is 15% of sales. The company has got in principle approval to increase capacity to 200 tons per day from 125 tons per day. Operationalization of this capacity by Q4 FY19 would take its overall capacity to 72,000 tons per annum. The stock, after its recent correction, is trading at a high single-digit trading multiple and offers an opportunity to accumulate. Now, the important factor to remember here is that both these companies that we'll be talking about are involved in an energy-intensive business where cost of power constitutes the bulk of all operating costs, and hence any adverse movement in prices of gas and power needs to be watched out for. Also, this business is highly cyclical in nature and the price cycle relies on global supply-demand dynamics, which is very favorable at the moment. Now, as is evident from the one-year chart, the company has not really done much and has been an underperformer. The company is a micro-cap with a market capitalization of 228.85 crores. The PE of 7.75 is much cheaper than the industry PE of 9, whereas the price-to-book ratio of 0.97 is also very attractive. The company's promoter holding is also very strong and gives a lot of comfort as it stands at a high number of 74.65%. Now the second stock on the list is Gujarat Alkalis and Chemicals Limited, which is available at Rs 599.45 and the face value for it is 10. The symbol for it is GUJALKALI. Now GACL is a major manufacturer of caustic soda, about 54% of its sales, and enjoys a market share of about 15%. It has an installed capacity of 4.2 lakh tons. With 36 products in the portfolio, the company is fairly diversified with products like sodium chlorate witnessing high demand. Prospects for the sodium chlorate business are good, particularly in light of the anti-dumping duties curtailing imports from China and the EU. Now, the company reported a strong set of numbers in Q1 FY19 with a sales growth of 38% year-on-year and 8% quarter-on-quarter. A strong operational performance resulted in a 989 basis points year-on-year jump in EBITDA margin to 38%. Also, a robust product price cycle has helped in improving the company's free cash flow close to 900 crores in FY18 by more than 4 times over the last fiscal year. Further, a strong balance sheet with virtually no debt helps the company embark upon a Rs 1,700 crores capex program over the next 3 years. This includes expanded capacities for a range of downstream products like chloromethanes, hydrogen peroxide, polyaluminum chloride, etc. Now the stock has corrected 37% from its 52-week high and is now trading at 12-month trailing PE multiple of 7 times. It is available at a very interesting level. Investors should keep it on their radar and monitor it for levels when price becomes attractive for entry. Now friends, please don't consider this to be a recommendation on our part. Please go ahead and do your own research. This and all of the content that you see on our channel is intended to be a piece of news. Thanks for watching, and if you have not yet subscribed to the channel, please consider doing so.